There is a piece of software I'm working on now. It allows the instructor to attach a bad answer penalty, unacceptable answer. You know, right answer may be 25, but if you got negative 25, but you know that it has to be greater than 0, but you say negative 25, I'm going to basically take you behind the woodshed and, you know, whip you over there outside of the eyes of civilization. That's what a penalty is, okay? But I seen that a lot when I was teaching business stats. You ask them what's the probability of something, they say 5.2. And they're not talking about 5.2%. If they've written 5.2 or negative 2, at least know as much. Probabilities are between 0 and 1, or 0 and 100%. Once, this was, let me see, my younger son was at 2nd grade. He's a college sophomore now, so this is what, 12 years ago? I did an exam. I asked them the following. An event A happens with a probability of 40%. Event B happens with a probability of 45%. What are the chances that both will happen at the same time? The answer is not enough information, because I haven't said anything about whether or not those events are independent. And the choices were 0, 85%, 0.05, the difference, 0.18, the product, and not enough information. Close to half of the class picked 85%, another 40% picked 0.18. That I can understand. They assumed they were independent. If they were, 0.18 would have been the right answer. That is excusable. But 0.85 is not excusable, okay? And I graded these. Next day, it was a Saturday. My older son had a quick recall thing somewhere, but I took the younger one with me too, because their mother was working. And before they started, it bugged me. I said, James, you know, I'm going to ask you a question. Okay. I said, this is a college question. He says, why are you asking me? I said, bear with me. I converted it into terms he could relate to. He was a big basketball fan those days. I said, Celtics win 40% of their games and Cavs win 45% of their games. He was a fan of LeBron James because of his name. And is it possible that they both win 85% of their games? He gave me a dirty look. He's like, why are you even asking me this? Says, of course not, Daddy. Now, the story, I didn't tell this story to say that my son is smarter than college students in 2nd grade. He's a pretty smart kid, but he's not that smart, trust me. He doesn't have an IQ of 175, maybe 140s. The story is, you didn't think. Okay? You didn't think about the implications of your answer. If you had thought about the implications of your answer, you would have immediately recognized that it was false. It's okay not to know stuff. Because if you're aware that you don't know, I can teach you. But here, you're obvious that you're not aware that you don't know. That's the problem. That's why don't think, oh, what formula do I use? No, think about what things mean. In the absence of any formula, they said, okay, let me add those two because it's one of the multiple choices. It's immediately, a trap there, boom. And those days I was doing confidence-based exams. A lot of students were actually fully confident of their answers, which means on a 10-point question, they get -5, not 0. They also lost 5 points from other questions. But if you're fully confident and correct, you get 12 and a half. But they could have simply said, I don't know. I would have given them 3 points out of 10, whether they're right or wrong. So I have that system. But it kind of increases student stress. So on my new software that I'm working with, that's going to be completely ready for spring, but I may be able to finish it and try on you guys after the fall break. You actually have the option. You can say, grade me regularly, 0 versus 100, or grade me based on confidence based. If you're confident, you could choose that. It's up to you to choose it. All right. In the second half, we're going to do a lot of problems, but one thing I'm going to talk about, by the way, in a lot of the problems in the book, it makes a it differentiates between cost of goods sold other than depreciation. Book typically call them costs, and also depreciation. So in that case, net income would be sales minus costs sans depreciation. In case you don't know, sans means without in French, minus depreciation minus interest. I mean, we'll do a lot of these things in Excel, but you still need to kind of pay attention to that. And you find depreciation and things like dividends in statement of cash flows. For the purposes of this class, we're not particularly interested in statement of cash flows, only to grab those numbers. So if you go to, where are you? I think it was here. The purpose of this, even though it's 100 years ago it was more relevant, but these days with different ways you can have access to cash and off-balance sheet items, it's not that much relevant, but it's still being done. What it basically does, it starts with cash and cash equivalents. It calculates how much that has changed. But for example, if I was analyzing this firm, I would have added short-term securities in there as well. But for accounting purposes, it's cash and cash equivalents pretty much. And it figures out, let's say that has changed. In Ford's case, it increased by, or it decreased by $6 billion, okay? Net cash has decreased by $6 billion. Well, what is that response? What are some things that are responsible for it? So we have three major activities: operating activities, activities that are related to production, sales, and other stuff. Investing activities, you purchase property, equipment, you sell property, equipment. Or securities, and you have financing activities. You issue stock, you repurchase stock, borrow, repay loans, and that sort of stuff. For example, in this case, changes in net cash provided, or if it's in parentheses, used in operating activities, 46 billion, okay? So operating activities generated $46 billion of cash, increase in cash. On the other hand, investing activities use 37 billion of that. A company like Ford, you do a lot of investment into equipment, So that goes into operating activities. In fact, as you can see, they purchased $63 billion worth of property and equipment. And financing activities, $17 billion. That pretty much means they either sold new equity or borrowed more, and they got $17 billion. But what we're interested in, where is depreciation? Right here. There is $41 billion worth of depreciation and amortization of property and equipment. Sometimes when you lease stuff, after capital leases, which means lease basically means rent. If the present value of the rent payments is above 80% of the purchase cost, that's considered a capital lease. And then depreciation applies to them. Otherwise, if it's a regular lease, you cannot book depreciation. So I know that number. This is another number that I kind of, when I analyze firms, view it under non-cash expenses. Until 2006, when you granted new options to executives or employees, you did not have to expense them at all. All you had to do is write a footnote to the statements. But after 2026, in fact, it's FASB 123R. FASB is short for Financial Accounting Standard Boards. You basically need to attach a value to that option. Let's say, let's look. Come on. Let's look at Ford. Let's say it's trading around $12 a share. And if